traders. I first want to review some of the things we did this week and see if there's some continuation moves occurring, or if you want to book things in front of a weekend. Let's start off with the euro. So this is how the euro came in on Sunday night. So, I got short right around here at the 115 level. There was a bit of a drawdown, but the 100 pip stop survived. And, from there, 115, you had a couple hundred pips. And let's talk about what it could do from here now. So to me, it looks like even if we try and rally again, that we have a descending triangle developing, or you might want to call it a head and shoulders, with 113 being an important level. I know I talked about 112 and going back left during the week, but a measured move, and you have to take it seriously. It's math, just ballpark. 1570 and 113. It's going to take you under 111 towards this moving average at 10 and a half before it's over. So I'm still constructive the dollar. This is not the beginning of a bull market in the dollar by any means. It's just a correction that's going to lead to one more decline in the dollar, one more high after we get down here in the euro, that we could probably head up towards 117 or better. That will complete the first wave down in the dollar. So let's take a look at the dollar. And, when I was talking, this was the day, bought it on this candle, stop, survive, should have partials. You look at this action here, it kind of looks like a little head and shoulders. We're getting a little bit of a pullback here. I still expect this low to hold. And before we get down there to take it out, that we could have a rally. I was talking par 50 to 101.50. I think that that's still attainable sometime next week. And well, with that happening, the euro should be at those targets. Also had shorts in Aussie that are, kind of like BE still. And the Aussie doesn't look great to me. I still think that we're going to be able to buy Aussie, or if you're still short, that targets really haven't changed. Even if there is a stop hunt, I still think we'll see 62 and a half to 62. The biggest winner happened to be one you had to be persistent. So, I talk about the three P's, about probing, about taking partials, and then protecting the remainder by trailing stops, and also talked about the other P being persistent. So I bought the yen this candle Sunday night, and I had 100 pip stop, so it didn't survive. Then I came back out and said, look, we have a throwover, and this is how you trade it. You wait until you have a blue candle closing back inside the overthrow line, which was a great entry. Still looks good. Earlier in the week, I said 146 is viable. I still think that's possible. I want you to keep an eye on the big picture and see what we held. And we held this 140 level and put in a nice reversal. I don't think the rally is going to have this type of strength like it did last time it was here. And then this time it didn't have as much strength. It made a lower high. And this time I think it's going to have less strength than it had this time. So, maybe a move back towards this moving average 46 or so. But next time down, I know a lot of people are looking to buy it at 38, and that would imply they're going to get a false breakdown and turn. It's my belief that once we take out 140, it's a huge breakdown that measures over 2,000 pips to the downside, down towards 120. That was my call here. That was my call here. And it's still my call that eventually we're going to break down. And with this happening here, with the yen breaking down, that keys in with lower yields, especially on the short end. So let's get to yields. We're having a negative week in the 10-year, which means yields are dropping. It's a 2-week reversal. I still think that rates are coming down. If we take out this formation here around 370, these highs over here were 470. then you're talking about 270. You're talking about taking rates all the way down here. Of course, 3.5 is going to be important, but I think we're headed down towards 2.5, which, I changed my view on bonds. We're putting in a nice reversal week to the upside after a inside week. This is bullish action. Okay, so perhaps the bonds at bottom, at least for a move, like I said, to 90. That's going to be an important test. We also have the Fed next week, so we'll see. Um, they're protecting this 85 level, so we'll see if they can continue to do it and get another rally and even take out the 93. But if you weren't long, at least you had a warning not to be short TLT, at least not yet. I do want to cover the gold. We are having a reversal week to the downside. I don't know if it's going to end up being a key. All right. But I think the shares were kind of telegraphing it not being as strong. But the big thing, even though silver's down 70 cents today, it's having an up week. The big news in PMs this week is this weekly candle on the gold silver ratio that I think is going to mark the highs for many months, maybe years. And I believe is setting in motion, especially once we start taking out 97.5, is going to take it back down towards, this breakout at 92.5. That's going to be a big level. Let me just draw that in. So that would almost make it look like a false breakdown. Um, let me just get that horizontal line here. This is going to be big. Okay. We get it in 92, we're going to end up taking out these lows. So that was the big news in the precious metals this week. Um, I said you'd have a break to buy in the miners. That's happening. Pretty good break you're getting in the miners right now. You have Newmont down a couple bucks. It's a reversal week. Let's look at what's happening here, shorter term. Okay, so to me, it looks like, 50 to 48 is a possibility. I think the gold tops in for a while. I think we'll see eventually 2,700 in the gold. We'll see what they do to the miners. GDX was even weaker. So you take 48 to 53, and that's going to give you 43. So the miners looking negative. I know a lot of people want to be long silver. I think you're going to have your chance. SILJ lower. We're either going to have just a correction of this advance or maybe even one more washout low. We'll see. This first majestic is interesting. See kind of weak it's happening. So right here. Because I still think that there's a possibility that everything kind of gets cheaper into the May-June timeframe. That's been my narrative for a while. And that would imply that we're not going right to new highs in the S&Ps. In fact, let's talk risk. So you guys know that this 4,800 level I talked about for a long time with the megaphone formation, and we've had a nice rally. We're playing with this 5,500, and I know a lot of the Super Bulls are saying we could go to 72. I was saying that too on the way down. I still think there's a possibility, though, since I don't know, I'm neutral, but I'll be attempting shorts up here, up around the 5,800 level. And you may ask, Dale, how do I come up with that number? Well, let's just say this is A, and from 4,800, this was 700 handles. 700 handles from this week's low. What a nice pullback to buy is going to give you 5,800. So I'll be trying shorts up there. Well, I'll come up with candidates. I suspect that it's going to be tech. That's going to has one more decline to complete. I'm not bearish long term here. I'm thinking that we have, maybe one more shot down if the guys are right, and then I think we're going to have a pretty good rally starting from mid-year. So that's my take on that. Let's just give you a quick update on oil, which has been kind of comatose. So here we are. This will be the third weekend of the negotiations with Iran. I think they're going to be showing their technical stuff, and we'll see if they could go 3 for 3 and keep this going. Maybe we're due for people walking away from the meeting not really happy about what what's on the table, both sides, and that there might be a little bit of an impasse. And I just want to say that there is a lot of pressure on the president for his moves and then retracting them and trying to stabilize things and having Besant come in and calm the markets and send Peter Navarro to the basement because his policies were creating financial turmoil. So we'll see. He may look at this with the Chinese. And I do want to talk about the Chinese. There's still talk that they're talking back channels. I think that if there is a deal with the Chinese, that it won't come till much later, maybe towards the end of this 90-day tariff uh, regime postponement, because they know that they have President Trump on the defensive. And so why are they going to let him off the hook? We know, let's just look at ourselves. Chinese people have been through some very hard times over my lifetime. And compared to us, where, I want to call my mom when my utilities are down for a day and I don't have my internet. So we're a pretty untested generation here, my generation. So the Chinese are going to, you know, the art of war. If your adversary is off balance and he's falling, you let him fall and you don't help him up. So that's my take on tariffs, that China's going to just hold President Trump's feet to the fire. Maybe we get a deal towards the end or maybe right after, and that would set up a real nice trading bottom in the S&Ps if we're going down into that time frame into June, right around summer, right, the solstice. So those are my thoughts, guys. I hope everyone has a decent week. If you did, let me know if you were persistent about getting back into the yen, if maybe you caught some of the euro action to the downside, if you avoided this big break in metals and maybe took some profits in your miners, so you have some capital ready to buy them when they get cheaper. And I think that there going to be a lot of value, a lot of things to buy. Start your shopping list and um, just start easing into them in the next couple months. So that's a wrap. Don't just count your pips, count your blessings. Have a great weekend, everyone. Remember, money comes and goes, time is gone forever. And don't just count your pips, count your blessings. Adios.